Philippe Cloutier, President and CEO of Cartier Resources, a gold exploration company focused in the Quebec portion of the Abitibi Greenstone Belt in Quebec, Canada. I'm going to present to you today our activities and how I believe we are an investment opportunity. As always, we expect you to do your due diligence. I will be presenting some forward-looking statements throughout the presentation. Capital structure of our company and the key elements of the share structure are that we have Agnico Eagle as a significant shareholder, O3 Mining as well, Quebec Sovereign Funds, myself, and the board own just under 40%. We believe that's a nice protective moat against opportunistic and delinquent bids on our company and the asset that we've been able to develop over the last 5 years. Key financials, well, we have $2.8 million in the bank, very low burn rates, so we could weather the storm that we're currently undergoing. We're a very small team, which allows for a very small burn rate, and we are in the process of obtaining the EcoLogo certification, which is part of our ESG commitment. All right, so on this slide, we're seeing where our projects are. We, as I mentioned, are in the Quebec portion of the Abitibi Greenstone Belt. We have two groups of properties, one group here in what we call the emerging Windfall mining district, and our flagship, which is situated along the eastern extension of the Larder Lake Cadillac Fault, where you can see there's intense mining activity. For the rest of the presentation, obviously, I will be focusing in and around our flagship project, where I believe we've generated significant value for our shareholders. So here we are. On this slide, obviously, you can see the trace of the prolific Larder Lake Cadillac Fault. The Chimo Mine, past producing mine itself that we acquired in 2013 for $261,000 out of a bankruptcy sale. You could also see the smallish Cornor project that was recently bought by Probe, and obviously all of the mills in and around the Val-d'Or city and Malartic. The Canadian Malartic mine is over here. The Goldex mine is over here. So we're in an address where there is a lot of qualified workforce and infrastructure. For the rest of the presentation, as I mentioned, I'm going to continue focusing on what we believe is the value for our shareholders. And there you go. So this is a bird's eye view of the outline of the property. It's quite sizable, as you can see. And most of the mineralization indicated here in red straddles the Larder Lake Cadillac Fault. I've also left in the former property boundary of the Chimo Mine Project. And so you can see that the reason we acquired the surrounding East Cadillac Project is that we understood by the fourth resource estimate or third resource estimate that this mineralization would expand to the east and to the west, and obviously at depth. And so, again, for the remainder of the presentation and for your benefit, I'm going to keep focusing on what actually creates value in the near term. So once we acquired the East Cadillac project, we had to consolidate the West Nordo deposit resource estimate to the Chimo Mine Project resource estimate. So we're now sitting at roughly 25 million tons with an average grade of 3 grams per ton. And as we presented in 2020 and 2021, ore sorting of the mineralization can practically double that grade, and you will see the effects of that. When we published our PEA, we did the wireframing in and around the mineralization that was most proximal to the infrastructure that I am outlining over here. So there is essentially 3 areas. The West Nordo deposit, which we acquired in the transaction, and the 3 resource estimates that we had produced that's around the main Chimo past production area and the newly discovered East Chimo Mine area. We were using a gold price of $1,750 US, And the PEA accounts for a mining of 4,500 tons per day in and around this shaft here at a grade of 2.7 for a total production of 1.4 million ounces of gold. And as I've mentioned, the material that we can sort, the mineralized material that we can sort, basically upgrades that gold mineralization to just under 5 grams per ton. But the real effect of that is we're going to reduce by approximately 50% the material that needs to be handled and milled, and therefore reducing the energy cost, reducing the environmental impact, but more significantly, reducing the size of the mill that needs to be built, and therefore the cost of building this thing. So we're mining 4,500 tons per day, but we're milling 2,400 tons per day. Now, we're obviously got our eyes set on growing the mineralization in and around the shaft area and in and around the West North deposit area that was recently acquired. And the reason for that is that will continue to increase or better the economics of the project. All in all, we have an NPV at 5% of $388 million Canadian, with an internal rate of return for the project as is of 21%. Here's an idea of the gold price sensitivity. We've been using a base case of $1,750 per ounce, and therefore these are the numbers are for the economic returns. Should the price of gold go to $2,000 per ounce, well, the NPV would climb to just under $550 million. The IRR post-tax would be 25.8, and we'd have an NPV to CapEx ratio of 1.58, which is quite beneficial. On this slide, you could see through the annual schedule process feed versus gold production, the grade that you're feeding the mill that's mined, that is just under 3 grams per ton, yet you're feeding the mill just under 5 grams per ton of gold. The annual production schedule would be just under 120,000 ounces of gold for a mine life of about 10 years. So what we've accomplished at Chimo is constantly growing the asset from the very first resource assessment in 2019 through to our recent resource estimate through the acquisition of this Cadillac project. We've grown the resource from nil to just under 2.3 million ounces of gold in both categories. Our objective in the next programs is to continue growing that resource, not only by exploring in and around the infrastructure to better the economics, but on the newly acquired drill indicated deposits and showings on the East Cadillac project. And therefore, we strongly believe that this resource base will continue to grow and make the project even more economically viable. And here's a map of what I was just talking about. For the past 5 years, we've only been drilling and doing resource estimates on this small core block here. The former property boundaries were over here. So one can easily understand why we acquired the East Cadillac project to now have a very large land package that we now call the Chimo Mine Project as a total. This is the first time in the 80-year sequence of exploration that one company has 100% ownership of all of these drill indicated showings and deposits. And as you can see, they were barely tested down to 200 meters. So we believe we're able to repeat the success we've had at Chimo beneath most of these showings and deposits. And that's going to be part of the next drill program. Obviously, the Chimo mine system in and around the infrastructure can continue to grow as well. One evidence of that, what we've just been talking about, is the discovery of a new gold structure that was recently announced. Why that is important is because we've seen at East Chimo, we've seen at Chimo itself, and at the West Chimo mine area, that there are strong structural controls that are now well known on the Chimo Mine Project, but historically weren't by our competitors and previous explorers. So we believe that at West Nordeau and on the new gold structure, we're going to be able to repeat that plunge-like exploration success and generate even more ounces and potentially new deposits proximal to the Chimo Mine area. So in a nutshell, what we have done is we have grown this past-producing mine since acquisition to the PEA level. We're going to continue, I believe, to grow this on a path to production in and around the Chimo Mine infrastructure. And we're also going to continue exploration on a regional scale to keep building ounces. And eventually, I think we're not only talking about one mine, but the emergence of a mining camp. That is to say, several mines. Our next moving forward catalyst, to continue to drill ounces in and around the infrastructure, to launch an aggressive exploration program at the regional level, east and west of the current PEA, and that will continue to build value for our company and our shareholders. That's it. If you have any questions, do not hesitate to call me or email me. I'm at your command.